that's it for that. So let's go ahead and start getting into it when it comes to the structures itself for trend reversals and basically how to place them. All right. All right. First thing first. All right. Just like sorry, excuse me about that. Sorry. Um, again, trend line, since we're going down, we're going over a bearish trend, we're covering trend line. Typically, when you are drawing a trend line, I highly recommend you use the line chart, because the line chart shows you the exact turnaround point for the trend line. Now, by all means, if you want to use the wick, I'm with it. But the turnaround point is the exact, it's literally, it tells you the exact point where the market like just turn around at. Okay. Remember, the wick is pretty much the highest or the lowest it went, but it's really a liquidity grab. What I mean by that is it's taking people's stop losses, hitting take profit, it's taking your pending orders, your buy limits, and so on and so forth, right? So if you use the exact turnaround point, right? So let's just say with here, ooh, let's change a different color, right? So normally when you draw a trend line, right? I know my line's a bit crooked-ish. When you draw a trend line, you start from one peak, right? And then you match, match the next one and so on and so forth. Now, some people say it has to hit more than one, more than three, more than four. As long you following the trend and you understand the previous high, you should be just fine, right? And what I mean by that is you can always adjust your trend line, right? So if it was like so, matching this, right? Let me be more specific. If it was like this, matching this one right here, right? And this one happened to be a bit lower, right? You can literally readjust, right? You either start from current or same top one just to match the previous one and bringing it down. Why? Because the previous structure is what you are looking to get broken, a previous low high. Let's go ahead and fill in the blank real quick, just like we went over before, right? A bearish trend is also considered as a selling market or a falling market, right? That will give you lower lows when it comes to structures, right? Lower lows. And after each lower low, market normally gives you a lower high. Let's change the color. Right, it will give you a low high, right? And then the low high points is where we look to take or sell. Now, in the case of this setup, right, we have a trend reversal. What do I mean by that, right? Notice how the market broke the previous trend line, the previous low and the trend line. First, it broke the trend line, boom, right? It broke the trend line. But remember what I said, right? The trend line is just a extra confluence to a trend reversal, okay? For us to get a valid trend reversal, a previous high has to get broken, not just the trend line. See, within here, see that? It broke a previous high, right? And it gives you a higher high, and then it retest structural point, also retest the same trend line to go up. It just did not dip within this point. Now, not just that, right? After it bought up, right? I guess we could throw that in there, right? You could even look at this right here as it was trending up, or let me draw it like I would, right? So I'll look at previous structure point and I'll run it matching the current one, which is this, right? Because that's what I have. I know this is part of structure, but I'm looking for the most recent structure to get broken. All right. Now, even though we're going over downtrend, right? Because this will transition to a downtrend. In the case of this, like I said before, a previous high has to be broken. In the case of this, we're talking about a higher low, right? Because an uptrend or bullish market gives you higher high and higher low, right? Why is it a higher low? It's very simple, because each high, right, is lower than the previous because it's below the previous high, right? Now, let's go ahead and just throw some zones in there, just identifying structural points for what it is. Okay. Boom, right? Now you see, just like before, market broke the previous structure point, right? But not just broke the previous structure point, it also broke the trend line, right? So what we look for is for market to come back and retest the trend line, all right? Within market, as market goes start to go back to retest the trend line, it will also retest the previous structure point. Now, in the case of this, we are transitioning from high lows to lower low. Why? Because this low is lower than the previous low. And this right here, okay, will be considered, this right here will be considered as a low high. Why? Well, because it's lower than the previous high. So if these were higher highs, right? Two equal highs, right? Higher highs. Now, yes, it's higher, but it's lower than the previous high. That's why it's a low high. And then you will look for your, of course, your PA, aka your price action at this level to take your sell, to match previous zones and so on and so forth. Now, the overall picture of this is, yes, a broke structure, right? And it retests, give you that buy setup. It went up, and then eventually market came back down to give you a DB. What do I mean by DB? Basically, give me a double bottom, right? So if it stops here, it went up. That is my zone point. So all I got to do is just put a regular horizontal line straight across, right? Anticipating for when and if market come back to the zone, which is right there. And once it does come back to the zone, I will look for a price action that indicate buyers are not in control in the 4-hour time frame. And one of those price action has to be one of my bullish engulfing variations. Here, as you can see, we got that blue candle that's bigger than the yellow candle. The blue will be considered as a bullish, and the yellow will be the bearish coming down. You see how it closed above it, right? And then you will naturally go ahead and pull the trigger within the 4-hour time frame. Of course, place your stop loss at the last low, right? Now, just so you understand, because we trade the 4-hour time frame, right? Because we are taking the entry off the 4-hour time frame, and we taking 4-hour price action. That means our 4-hour setup will be valid, or a price action is going to be valid between a 4-hour increment, either 1, 5, or 9, right? Either AM or PM. So you never have to sit in a chart for longer than 5 minutes. Like there's no reason why, right? Because if you are somebody that says I like to trade the New York session or the London session, all right, it's 9 a.m. for New York, right? Between 5 is pretty much London session, right? And then towards the Asia session, you got between 1 and 9 p.m. 1 p.m. and 9 p.m. going to 1 a.m. Sydney, Australia session. It's very simple, right? It's just simply waiting for your setup to be available to you, because again, you use the 4-hour time frame, right? That price action will be available between those times. That I could guarantee you. There is no if or but. It will always be available within 1, 5, or 9, either AM or PM. Easy work. All right. Now, what I want to throw out there also is if you are interested in learning in this type of way, hands-on, slow enough, very interactive, go ahead and hit the link below, or type in royaltyfxacademy.com. You will be able to find me. All right. We do have 4 classes a week. And at the moment, all one-on-ones are free. Okay. So we do give homework pretty much almost every Zoom class. All right. So I really like you guys to truly understand how to trade. And most students really get this within a period of 4 to 6 months, not even 6, if you do the homework, because the process is very, very easy. All right. So again, if you are interested, royaltyfxacademy.com. That's where you will find me. All right. Now, also YouTube, just type in Royalty FX Academy. You can watch this full session itself. All right. Now, there goes another variation of a downtrend. So now we're going to go ahead and throw the trend line. What I want to cover with this one is how can we take our trades with the continuation trend, also with market bouncing off trend line, right? So let's just go ahead and throw that trend line in there real quick. Let's use gray real quick, right? So again, when you draw on your trend line, you always want to use the line chart, because the line chart show you the exact turnaround point. The exact turnaround point is what the market got to close above to give you a new high structural point, right? A new high point. Okay. Because a lot of time we get the stop hunts, when the market does this, right? It ended up closing like so. Normally what happened is the market goes up bullish, right? Like crazy. It goes up bullish, but it ended up coming back, right? It ended up coming back, retracing back down, closing within here, leaving a wick behind, right? Again, yes, the wick shows you the highest it went because it got to collect orders, TPs, and his stop losses, but this is exactly where it closed at. All right. So because it went above it doesn't mean it's a new high. It doesn't mean it's a break of structure. All right. It has to actually, the candle has to close above it for it to be considered as a first part of the break. Okay. So with the trend line, let's go ahead and do this real quick. With this trend line, again, a downtrend, we want to start with turnaround point, running it straight across, right? Let's just say this is what I had. It will look like so, right? If this was the next one, it will look just like so. And if this is the next one that I have, it will look just like that. So there's absolutely nothing wrong with readjusting, because you have to readjust. All right. Readjusted because market is giving you new structure point. Not every structure high is going to be the same level. Okay. So with this right here, this is how it would look like. Okay. Boom. There goes our trend line. Now I'm going to remove the other one, and then we're going to cover some entry points during the downtrend, just, with the trend line itself. Okay. Now remember, the trend line is just giving you a general guide as far as where the market is going, right? It's just an extra tools to help you understand the overall trend, the bias overall. Again, all these trend lines, zones, these setups have to be based off your higher time frame, which is your monthly, your weekly, and your daily, because you want to see the overall trend for the month and the year, the overall trend for the week going to the month, the overall trend for the day leading to the week, and so on and so forth. Okay. We don't use the lower time frame to understand trend. We use the highest time frame. Okay. The bigger picture. All right. We are not the small fish. We're trying to be the big fish. All right. So let us be that. Now, in the case of there goes the first one again, like before, downtrend consists of lower lows and low highs. Okay, and just like before, in a downtrend or selling, also known as a bearish market. Okay, we sell at all low highs. Okay, now when market breaks a previous lower low to give you a new lower low, right? Excuse me, and it went back up to retest that previous structure point. Sometimes, as you can see, it did not hit it. It went semi short. That's okay. All right. Now, and we're going to go ahead and anticipate for the next one, right? We're looking for something that's more towards the previous low point. And, in doubt, a lot of time will end up being a lot closer with the trend line, right? So here's the previous zone again. Market broke through. Okay. So we're looking for the retest point. Okay. Here it is, the retest point into the zone. And again, really close to the trend line also. You will look to take a sell because you following the original trend. You following the traditional trend. You being one with the market. You're not going against trend. All right. Here at the lower high, you will look for your PA, also known as your price action. Okay. And then you put your SL, your stop loss, at the previous high. Okay. And then we'll continue back down. As you can see, boom, it breaks. Market again head towards the trend line itself. Right. Again, it doesn't matter if it hit it. Okay. What matters is especially with this continuation trades, what matters is the pullback to the zone. How much did it retest? Now, if you have not seen any of my videos, if you use fib, I recommend the fib level that I recommend as far as the lowest would be the 50. Okay. You always want market to retest or retrace at least 50%. Okay. And then of course we go to the 61 and then 78 and so on and so forth. All right. When market retest or retrace about 50%, the setup itself probability is a lot higher. Right. We don't use anything lower than that. Okay. Just think of it like this. If you let somebody borrow $100, if they give you half of that, you're less likely to bother them. Right. You're going to give them a little bit more time to give you the rest back because they look like they're making a little bit of effort. Right. Or from a business perspective, if you bought some mangoes and you sold that, you spent $100 and you made $500 selling mangoes, right? What percentage of that are you more likely to reinvest within your mango selling business? About 50%. 60, there's nothing wrong with that, but within 50%. So think of it just like that, okay? If the market gives you X amount, okay, it's more likely to come back to get at least half of that back. All right. There's a method to the madness. It makes sense. You gotta make sure you understand that it makes sense and you're just following the guideline. All right. Don't be in a hurry with using. I don't even want to. I don't even. You know, I'm not gonna even say it because I don't want y'all to be using that. It's 50, 60, 70 above. Okay. So on and so forth. As you can see, market went to give me a new lower low. Right. Of course, we wait for a retracement point, as you can see. In the case of this one right here, it's not just it's a retracement point. It just happened to hit the trend line itself. Okay. Because it hit the trend line, it doesn't exactly make it stronger or anything at all. Right. It's just at the trend line. As long as we know it's within a 50, 61% retracement or at the previous structure point itself, then we will, anticipate that. Once market give us a PA or a price action, we go ahead and take that sell after a price action, of course, to fall and stop loss at the last high. Now, I know with the very first one, I did not mention the sell aspect is because the retracement was too small. All right. We don't do that. We always wait for a bigger retracement. Why? If you take the sell, no, you're not going against trend due to the fact that it wasn't even a 50% retracement. It is, more likely to buy up a little bit more. But because of our rules that we follow when it comes to stop loss placement, right? If you take this sell here, and your stop loss is above, remember, right? If we have $3,000 to $4,000 in the trade, okay, I'm just throwing it out there on the account, and your overall, let's be a little bit more realistic for everybody else, right? If you have $500 in your account and you already told yourself that, hey, I am willing to risk, okay, $50 per trade, no matter what, I'm always going to be risking $50. So when you take your sell here with your price action, right? You took a sell here with your price action, a bearish engulfing to be more specific, right? You will place your stop loss at the previous high. That's your SL, right? Now, all you got to do is just adjust the lot size accordingly. That way your stop loss equals to $50, right? Money sign 50, right? So you have to be disciplined with that. So yes, it's bigger. It doesn't mean anything, right? If you was running in a $2 lot size, well, drop it down to $1 because that way it'll equal that same $50. Okay. Stay true to your discipline. Stay true to the system, and I guarantee you will excel. Okay. Now, so that's why I didn't take that. I wanted to throw that out there. Okay. It didn't hit my zone the way I needed to, and I need a deeper pullback. If the market does not give me a 50% pullback, I stay away. Right. Predominantly, I stay away. Now, if I choose to take it, I'm dropping my lot size and I understand how much I'm risking, and then we'll be good to go. All right. Now, of course, I want to say that too. Not every pullback is going to be 50. Sometimes it may not be, but If it's not 50, I pretty much stay away from it for the most part. Okay. Now, market went with back to this one. Okay. So here, so market went to the zone of giving us a previous, giving us a new low high after a lower low. Again, PA, we take our price action here and we put a stop loss at the previous high. Okay. Same concept. Okay. So even, see, notice how this is a bit smaller. So we're just going to adjust the lot size that way. This stop loss equals that $50. Nothing more, nothing less. All right. Rinse and repeat. Respect the rules. Now, after market went and fell, right? So our trade played out, market fell, and it stops here where it create a new lower low that's lower than the previous low, as we can see, right? And then it went up. In the process of going up, it broke our trend line. Cool. Remember, trend line being broken doesn't mean trend reversal. We need a previous structure high to be broken, and that's what we got here, right? I'm gonna clean this up real quick so we could adjust a bit, right? We got this previous low high that got broken. Once the structure is broken, all right, now we start giving a little bit more validation to the trend line. Remember, the trend line is another confluence that you would use just to give you that general guidance that you're looking for, okay? Either for the reversal aspect or the continuation trend, okay? So it broke, giving us a new higher high. Why it's a higher high? Just like before, right? It's higher than the previous high, which was the low high. It's higher than the previous low high. Now we got a higher high. Now, since we are transitioning, right, to a uptrend, we're gonna look for market to retest, retrace, right, or retest one of those zones that we have, either zone 1, zone 2, or zone 3. Now, we don't want to be in a hurry, okay, because all we're doing is just simply monitoring. When market hit this zone, we look at what time it is. We look at the current candle, that current 4-hour candle, depending on what time it is. We know, okay, if it is 350 within the zone, we know, okay, cool. At 5, that current candle will close. If that current candle closes at 5, that means I'm going to anticipate my price action to be available at 9, because that will be the next 4-hour candle, right? We don't just take it because it's at the zone. That's not how we trade, okay? We're not gambling. There's a method to this, okay? There's a system, okay? Think about it like this, right? You don't just show up to work because you want to, right? If you're not scheduled, you don't go in, right? So this is a scheduled setup. Once it gets there, it has to give us that price action, right? You don't show up at 9 a.m. when you're not scheduled at 9 a.m. All right, so either here, first one, second one, or the third one. Once market give us my PA, okay? Let's just say right here, give me a PA. Let's make it look more attractive-ish. Once market give me my price action, a bullish engulfing to be more specific, right? I'll go ahead and pull my buy. Once I pull my buy, I'll look at the previous low for my stop loss, and then I'll target the previous high that it gives me, previous higher high to be more specific, okay? Like so. Either one, for it to either hit it, come back down, or break through it, all right? Either hit it, come back down, or break through it, because I don't control what the market does. I don't really dictate what it does, right? I can anticipate what it's going to do at what specific time, and all I got to do is just join it. That's it, right? So once it does that, you know, we're looking for it to break, of course, come back to retest, and so on and so forth, okay? See that little man right there? Just like he knows what he's waiting for. You know what I mean? It's like, it's coming. All right. He knows exactly what we're waiting for. All right. Cool. So let's go ahead. Let's go ahead and look at the next one.